Welcome, everyone, to another episode of Inspire Wealth. I am your host, Mallory Meehan, and I am coming to you by myself. So, this will be a solo cast that I wanted to do to basically give everybody a little bit of background about what I'm about and some of the key topics that I enjoy sharing. So, I will be your guide today, your teacher, your instructor, your mentor in helping build wealth through different platforms and different structures. So, one of the big things that most people know about me is that I have a passion for real estate. And when we're talking about real estate investing, I think it's important to understand that there are several different types of real estate assets. So, one of the biggest assets that anybody is going to be able to own is usually their own home. So, while it may not seem like an investment to some, owning your own home actually builds equity. We hope that every property appreciates in value, meaning it grows in value so that at the time you actually go to sell, the property has now been worth more than what it was when you originally purchased. So it's really important to get a grasp on your own personal real estate that you are consuming, but also understanding how to utilize real estate as an investment strategy. So, when you're looking into different real estate investments, you want to understand exactly what type of property you feel the most comfortable with, or you are really looking into expanding into. So, first and foremost, the probably easiest route to go in real estate investing is typically in your residential market. So, this is where you're buying single family homes, maybe condos, duplexes, triplexes, and you are finding long term rentals for them. And that's pretty much probably one of the safest areas you can invest in. Now, obviously, every market is a little bit different. So you will want to understand exactly what type of tenant you may be going after. There are different strategies that people utilize, whether or not they want to go after things like Section 8 housing, they want to go after student housing, retirement housing, or just ordinary single family rentals. So it's important to understand exactly what route you might be interested in taking. Now, beyond the traditional residential, we also have several different types of real estate investments that you could invest in, that are more so on the commercial side. And when I say commercial, I basically just mean anything that's producing income, in my view, is a commercial property. So while residential in theory could be potentially commercial, this is more so thought about properties that are larger, maybe having more than four tenants, meaning there are four units or more. Maybe it's an apartment building, maybe it's a business. So, commercial assets are definitely an interesting market to get into. We have several different types of commercial properties you can get into. You can get into office, you can get into hospitality, hotels, retail, shopping centers, industrial, all sorts of different avenues that you could potentially put your money in. Now, one of the nicest things about commercial properties is that you're typically not going to have your tenants calling you at 1 in the morning about a clogged toilet. So, if you are not wanting the headaches of tenant complaints or maybe constant tenant communication, commercial assets might be the route that you might be more inclined to go after. They typically have a higher price point, but not always. And a lot of times, if they have solid lease structures already in place, your tenant is actually going to be the one taking care of most of the expenses tied to the property. So that's something we'll get into on another episode, would be something called triple net leases, or just understanding the different lease structures when it comes to commercial property. So a lot of people want to know, why invest specifically in real estate when you can just put your money in the stock markets and you don't have to be the one to actively manage? Well, some of the best advantages of real estate are that it can be completely passive. It can be almost identical to you putting money into the stock markets, except you do still have control over that asset. If I invest in shares of Tesla, I really have no direct correlation or direct input on how they run their business, how they um, perform layoffs or anything along those lines. Whereas if I'm investing in real estate, I do have a direct impact on who my tenants are, what they pay, what are my costs, um, what are my operating costs, what are my other costs tied to owning this property. Not only that, but you also get very, very key tax advantages when you own real estate. This is going to be huge, especially for someone who maybe is looking for routes to offset or mitigate other taxable liabilities, depending on if they have a high paying W-2 or if you have other investments that you've maybe had high yield returns on and you need to offset that with some other tax benefits. Real estate, by and far, is one of the best routes to take in order to mitigate some of those tax issues that you may have. Now, how are you going to be successful when it comes to finding a property? Well, one, you're going to have to really understand the market that you want to get into. First and foremost, I like to recommend that you start with a market that you're very familiar with. Maybe this is the market you're currently living in. Maybe it's a market that you have lived in the past and you feel like you have a good grasp on it. You want to really understand what's happening within that market. Are people moving to this market? What are the jobs likely? What are the properties like? What are the comparables like? Really understanding how important the location of the asset really is in comparison to the rest of that market. Now, that's really going to be one key thing that you'll hear me say time and time again: location, location, location. It is the one thing about real estate that we cannot change. We can't change the location. It's going to be there. It's not going to be able to be changed. And that's where understanding what's happening in proximity to that property is really going to be important, regardless if you're investing in residential, commercial. Either way, the location of the asset is key for having real estate investment success. Now, getting into some of the tax savings when you are looking to get into different investment opportunities, specifically real estate. One of the basic things that you're going to want to understand is what tax bracket you are falling into and what implications any income within your properties might have on that tax bracket. So, what do I mean by this? If you have a W-2, you have a job, you receive a paycheck, you are most likely receiving a very much reduced paycheck. Now, the amount of taxes that is taken out of your paycheck is in what's called a modified tax rate. And so, what that means is you are taxed at different levels depending on what your take home salary is. And so, it's a tiered schedule where you maybe have a blended tax rate of 20+%. Now that's huge. Every dollar or every $10 you earn, $2 of that is going to the government. Think about that for a second. That is a huge, huge implication for anybody's pocket. So, how do we reduce that tax liability? Well, the two biggest things that you're going to want to take into account are going to be your deductions and your credits. And whenever people start talking about tax, I know sometimes I see people's eyes glaze over, but this is one of the key principles of understanding the tax law is what deductions and what credits can you utilize specifically as an investor, And as somebody who maybe is opening or creating a business, and if you own real estate, it's a smart idea to also own those real estate properties under a business asset. That way, you're able to not only deduct your expenses or other credits that you're getting for owning the real estate, but you're also going to be eligible for those additional deductions and credits as a business owner. So, those are really key strategies when you're thinking about starting your real estate investing career. The other great thing about real estate specifically is there's this beautiful, beautiful thing called depreciation. Now, if you have never really looked into real estate, when you go to file your taxes, the IRS basically has different uh, lifespans for different asset classes. For example, if you purchase a single family home, the IRS says that that home or the property on top of the land has a useful life of 27 and a half years. What that means is every tax year, whatever the value of that improved property, so maybe what you paid for it, less whatever the value of the land is, because land cannot depreciate, you get to use, and let's do easy numbers. If you bought a property and the value of the asset, the house or structure, is worth $100,000, you get to take $27,500, $2,750 every year for 27 and a half years as an automatic depreciation, meaning it automatically lowers whatever income that property might have produced for you through no other reason other than it is a depreciable asset, meaning it does have a useful life. Now, that is a great way to reduce some tax liability to maybe offset some additional income. The other great reduction of liability is going to be something called a 1031 exchange. Now, I'm not going to get too in the weeds with this, at least on this episode, but in the future, I am going to cover different opportunities where you can basically purchase real estate, have it grow, have it appreciate over time, and then sell with no implication on capital gains taxes. And so the way that you can do that is through what's called a 1031, which is the code in the IRS tax book. So just know 1031 exchanges are a way to consistently defer any sort of capital gains on any property that you might own. Now, these are very somewhat complex strategies, so I highly, highly recommend that you hire a really good tax professional and a tax professional who's not only going to help you at tax season, but they're also going to help you throughout the year. Taxes are not just something that happens on April 15th. It is something that you're going to have to build into your everyday life and figure out how you can constantly be saving for that taxable liability. Now, the other thing I want to talk about is ways that you can build wealth through your retirement. So we have retirement funding, and a lot of people often have 401ks or IRAs or maybe some other retirement vehicles that they were given through their employer. Now, these are obviously great. The thing to understand, however, is with things like 401ks, you are going to have whatever draws you withdraw at the time of retirement be taxed. So all of the money that is being put into those kinds of retirement accounts are not pre-tax dollars. So they are going to be taxed at the time you withdraw, and you're going to be taxed at whatever tax bracket you end up being when you reach retirement. So a lot of people assume that they're going to not owe that much in taxes when they retire because they're not going to be collecting as much money. However, you need to consider that while you are retired, you're not going to have all of the other deductions or credits that you may have had while you were working. So You really want to be smart about how you are utilizing your retirement plans. And one great way to look into potentially diversifying or expanding your retirement would be to use a retirement fund to invest in real estate. And so, what you can do is you can actually open up an IRA, which is pre tax dollars, and use that pre tax dollars to then acquire a piece of property. Now, there's a lot of rules and a lot of things that you're going to have to understand before you can go out and do this. But if you work with the right tax professional and financial advisor, this could certainly be done where whenever you are withdrawing any sort of cash flow from that, it's going to be withdrawn tax free at retirement because you use that pre tax dollars. So that would be one of my biggest pieces of advice for individuals is use your pre-tax dollars when you are in the lowest of your tax brackets. And most likely that's going to be in the beginning of your careers or even at a time before you switch jobs. So it's not a bad idea to convert retirement funds into IRAs so that when that time comes and you do retire, you're going to be able to take home tax-free income. Okay, so last thing I want to talk about today is going to be businesses and the structures of building those businesses. So I had mentioned before that real estate is one of those asset classes that you get really, really good tax advantages on. Now, another thing to consider when you're owning real estate is that you want to have a reduced liability. Now, what do I mean by that? You want to be able to separate yourself from any of your particular rental assets. If you were to get sued or a tenant were to be injured and they were to file a claim against you, the landlord, and you owned a property under your individual name, that tenant or whoever the plaintiff is can come after you and any assets tied to you. This opens up a large amount of opportunity that they can come after multiple assets of yours. If you have a retirement plan, they can come after that. If you have other properties that are listed in your personal name, they can come after that as well. So best piece of advice would be when you are looking into really growing your rental portfolio is to put those properties under some form of business structure, whether that be an LLC or an S corp. This can really limit your liability and also help you with structuring the best tax advantages. And so with this, you're able to keep your business finances and your personal finances separate and outside of the purview of anybody who may be trying to start litigation with you. So, the other great thing about creating these business structures is that not only are you going to, again, be able to use all of the credits and deductions that are already given to you for your real estate, but you're also going to get all of those additional benefits of having a business. And so that's why it's important to understand when you're investing in real estate, not only are you investing in that asset, but you're also investing in a business. And so when we look at the tax code and we look at what the IRS is trying to tell us to do, they are telling us to buy property, supply housing, create opportunity for businesses, and create new jobs. That can all be done specifically with owning real estate and structuring it so that your real estate is part of a business. So that is a high level overview of some of the things that I plan on covering um, throughout this podcast. Again, real estate investing as a whole can have multiple different facets, and we'll definitely get into all of those different facets and which ones I'm finding to be the best use of my time, at least, and what I'm seeing in the markets. I will always be giving you tax advice or at least guidance when it comes to how to not pay the government legally, of course. And then also how you can structure future earnings and future gains so that it's going to be most advantageous for you when you decide to officially enter that retirement phase. So, if you enjoyed listening, please drop me a note, subscribe, and stay tuned for our future topics where I will be bringing on other guests talking about other topics, not just real estate, but other wealth building strategies to help you understand all of your personal and investment financing needs. This is Mallory Meehan, Prof M, out.